All right, guys, what is good? Hope you guys are having a great day today. Middle of the week. It is Wednesday, June 7th, 2023. And we got a lot going on today in the markets. And a lot going on social media as well, as far as the YouTube, Instagram, whatever. And I sound a little bit sick. I don't know what's going on. I must, still not be awake. I don't know, but I feel fine. You know what I mean? So, but anyways, what's good, Willow? What's good, Jose? Miguel, Josh, Nicholas, and Ibranith. Let's go. Appreciate the like as well. If you guys can hear me and all is well, you guys know to drop a like on the video. I greatly appreciate that. So anyway, if you haven't seen my stories or if you haven't seen my Twitter today, that's okay, because I absolutely fucked up these markets on the TradingView paper account today. All right, so yeah, full disclosure, it wasn't a live account. I was actually focused on doing some other things. I wanted to take a brief look at the market. When I did, I saw some shorting opportunities. So I promised my team that I would go over it a little bit more later on the live session. So here we are. At the start of the afternoon session. Okay, so there's kind of I have this running joke almost with you guys, at least, about Twitter traders and shit like that, and it's just funny. If we stay on the 1 minute, okay, I was shorting this up here. Okay, I was shorting that right there. I mean, fuck, look where we are right now. That's crazy. I definitely didn't hold. I mean, I got out on the last one, like right in there. So I mean, it's cool. I honestly wasn't expecting that we would sell off this aggressively, but it's all gravy. Okay. But one of the things about Twitter traders, and this is one thing that I never really agreed with either, is, and I made a video about this on my YouTube a really long time ago called Turtle Soup. Okay, turtle soup. And I don't want to get into all the details. Turtle soup is really old. It came from Street Smart's book by Linda Raschke and Lawrence Connors. I think, and Larry Williams is in there too. He didn't write the book, but I think like he's in the book. They were having a conversation or something. But anyway, a turtle soup is basically a run on a previous daily high, like a high or a low that's been set within the last 20 days, something to that effect, right? But what has happened in recent years, probably like the last 5-6 years, is that a lot of people will call let's say a short-term low that's swept and then reversed. A lot of people call that a turtle soup. So they'll go, oh, that's a turtle soup, that's a turtle soup, that's a turtle soup, like every move. And personally, I think that's a little bit ridiculous, because that's actually not the real turtle soup pattern. It's based off a daily time frame, not like a 1 minute or 5 minute chart. But either way, a lot of people call short-term highs and lows when they get swept a turtle soup. Okay, now again, I don't agree with that, but that's why I put that turtle here. There is one guy on Twitter, he's blown up like the last year, maybe year and a half. I haven't been following him all that long, but he goes by Romeo, and he's really big on stuff like this, where he will short above short-term highs, or he'll buy below old lows. Okay, now I taught you guys how to do that. My process is a little bit different, right? I call it the Y slime. Your stop loss is my entry, right? Entering where others are getting out. I've already taught you that for years, right? So it's not brand new, but I wanted to kind of show off a little bit today by shorting above that old high and covering below some old lows. So I was just having some fun on Twitter today. with that. So that's again what that looks like. And if we look at a price chart of where we are right now, again, we are, you know, that was way up in here. Okay. So if we look at a 15 or maybe even a 5-minute. Now I woke up early this morning, which was cool. I actually went to bed. That's what made it easier to get up this morning. You know, not like, what am I supposed to do? Like Marcus Aurelius, but more so like I was tired as fuck yesterday. So I went to bed early, woke up early today. Great. So I got on the charts and I got to shooting some content and stuff like that. So when I briefly looked at the chart, I don't think it was a 5-minute. I think it was a 1-minute. Okay. Now, one of the things I look for, you guys already know, one of the first things, and guys, if you don't have your notebooks ready, you need to grab a notebook. Okay. The live sessions are almost always going to be note-taking moments. All right. Because, you know, we can do videos and stuff like that, but you're going to be rewarded for being here, you know, for showing up and giving me your time. You're going to be rewarded for that. So, and what's good, Cameron? Welcome to tier 2. We're getting real close to 70 members here, man. Let's go. Let's go. But yeah, what's good, Willow and everyone? I think I mentioned everybody already. Ibranith, Nicholas. I think I got everybody down. So one of the first things my eyes go to, all right, is I'm looking for liquidity that's been taken or liquidity that is being ready to be taken. All right. The mitigation model I've taught in the past, I'm going to teach that, I think, next week. All right. I still have the presentation. I just have to record it, but I'm also going to include some examples and stuff like that. And I'll probably release that next week. Okay. So the mitigation model again will be next week on, let's do Wednesday of next week. Okay. So today, yesterday, Tuesday, was the market review for the NASDAQ and gold. Today was actually a video on goal setting. I forgot about that. I put it in 2 days ago to be released today. So you actually get the goal setting video as well as the institutional order flow video. And then you get the live session as well. So today is like a triple threat, plus the reel, or not reel, the YouTube short. So I put out like 4 fucking videos today. All right. And then Thursday is going to be the market review for tomorrow. Okay. So let's shoot for Wednesday, the 14th. That's going to be when I release the mitigation model. So I may release something in between today and then. I don't know yet. I'll figure it out. But as far as membership only videos, you're going to get the mitigation model on the 14th of next week. All right. Wednesday of next week. What's good, Seneca? I think I said that correctly. What's good, Kevin? And I know some of you guys are excited for that because that was a video I had put out and it got taken down, unfortunately. So we have to, well, not we, but I will rectify the wrong that you've been done. So, but it's cool. It's cool. It's all gravy. All right. So back to what I was saying. What's good, Marvin? When I look at a price chart, top-down analysis, whatever, first thing I look for is liquidity, either resting or liquidity that has been taken. Now, this morning, there was a big disparity between the Dow. I'm just going to take all these lines off. I mean, look at the Dow. What the fuck is going on today? All right. Bonkers today. But so we saw a huge disparity because I want to say the Dow was going higher heading into the first 10 minutes or so, and the NASDAQ completely got its face ripped off. I mean, look at it. The Dow is slightly green, maybe break even, like on the trading view calculation, and then you see that the NASDAQ is down like 1.3%. So that's face ripping at its finest, at least for the NASDAQ. Okay. So either way,
Dow trades up, NASDAQ trades lower. But when I looked at the S&P, okay, it also went higher. But if you look at just in here, right, it's not a lot of information as far as like a time window. It's only about a little less than 2 hours in here, but it's still giving you a ton of information to work with. All right. So we see you have a high, you have a higher high, and then you have a higher high. Okay. However, we don't do this all that often. I used to do this a lot more with you guys, but we'll try and bring it back. You can actually take the wicks off of your chart. Did you know that? Did you know you could do that? Yes, you can take the wicks off of your chart. So why would you want to do that? Because if you're someone who looks for, let's say, candlestick patterns, candlestick formations, like the Candlestick Bible or whatever, you know, if you look for shit like dojis and train tracks, and I don't even know what else is out there, but I know there's, you know, that's the kind of stuff that people look for. Then you're gonna probably look at the wicks and the bodies and stuff like that. So when I teach you guys about mitigation, or even the institutional candle, right, we take measurements from the bodies. So when I look at it, I'm not looking at the wicks per se, I'm looking at the bodies. So this is kind of what goes on in my mind, essentially. I mean, the wicks are there, but I'm ignoring them. And even if the way you do that is you go into the chart settings, you go under symbol, and the wick where you can change the colors, you just uncheck it. Okay, like if I wanted to undo the bodies, we could just look at wicks. I don't know why anyone would ever want to do that, but that's how you take the wicks off. Okay, so now with that information, you don't see like the three highs, the high, the higher high, and then the higher high, but you do have one, and that's enough. You have a high and then a higher high. Simple as that. High, low, higher high, definitely a lower low. Definitely a lower low here. So then what does that set up? That sets up a potential mitigation. Okay, that's what that looks like. Now we're going to go back and turn our wicks on, because it's going to be hard to see an imbalance if you don't have a fucking wick. All right. So there is your mitigation. Okay. Price comes into that. And I don't really think it, on a 1 minute time frame, I don't really think it met anything except maybe this old gap right here. But that's fine, because I didn't look at the chart at 9 o'clock. I didn't need to. But I want to know that it's there. I want to know that it's there. Why? Well, I didn't plan this. It might have seemed like it, but I didn't. I didn't plan this, but I put out a video on institutional order flow, and then I came in here and dominated institutional order flow. So again, I know that makes me look cool like a badass, but I promise I didn't do that on purpose at all. I made the video not a long time ago, but I made that video a while ago, but I posted it today. And then what I taught you in that video, I also did here today. So number one, I obviously want you to watch that video for the members that are in here, which is most of you, but it's a members only video. And I didn't trade the mitigation. Shit, I didn't even trade that first imbalance right here. That first run, I didn't even trade that either. I believe the first candle I got on, or I got in, excuse me, was like right in here. So it was a shit entry, right? It was a shit entry. And then when we came up to take this high, I got in again. Now again, if you came in late, you can see that here. Full disclosure, TradingView paper account. This was not a live account, okay? But you can see right there, 42.9675, and then 42.98 and a half. So 42.98 and a half. I might have got fucking slipped a little bit. I mean, on a paper account, it's really not that big of a deal. but 42.98 and a half is right there. So why I didn't get in above that high is fucking beyond me. But either way, that was the higher of the two entries, okay? So there you have it. Oh wait, 98 and a half was here for the S&P. Sorry, not the micros, ES. Okay, so it was like just coming off of that high, like right there. Okay, price comes down, meets the lows, rallies, and then drops down, and I was getting out right in here. Okay, now I'm showing you the micros because that's where at least where we started marking up. So I'll finish it here, but imbalance, okay, and then running for these lows down in here, the 42.90s, okay. And then I didn't see this because this didn't print on ES, but the micros did print a small gap right there as well. So look, I'm not going to claim to be the best trader. I'm not going to claim to be the best analyst or really the best of anything. I'm going to do my best, okay? But I would never claim that I'm number one at something. However, you have seen some extreme precision on this YouTube channel, all right? You've seen the power of what gaps can do. All right, we've even done stuff like that live. If you remember the Dow from like 2 weeks ago, right? We saw that gap. We said we want to see it run away, and it fucking ran away, right? That is a part of order flow. All right. So just to wrap this up, not the mitigation, but I want to know that it's there. Not the first imbalance because I wasn't even looking at the chart. I got in a little bit late here. Second entry was coming off. I thought it was above the high, but you take a fucking market order and I guess it doesn't give you what you wanted even in paper. So whatever. But either way, market comes down, rallies, gap, and then sinks for 42.90. So why 42.90? Because if you go out to a 1 hour, those lows are 42. Is that right? Yeah, these lows right here, at least on the micros, are 42.91 and a half. On a 15-minute, didn't really see a whole lot, but on a 1 hour, it was just a little bit more clear to me. Was this imbalance here? Okay. And I don't think the NASDAQ is done. I think we're going to keep selling off on NASDAQ, but I'll bring that up in just a minute. So there you have it. Okay. And so that's what that box is here on the E-mini. And so that's why you see that on the screenshot. Oh, it's not on the screenshot. I lied. Well, anyway, 42.91 and a quarter. 42.89 was the two exits, right? So 42.89. Okay. Where is that? 42.89 is right there, which happens to be where? That imbalance. See that? Do you see that? Oh, and we're fucking red today too. Look how close that was. That entry up in here, 98 and a half, dude. That would have been really, really stellar had I held that. But that wasn't a plan, so I'm not going to bitch about it. I mean, I am going to bitch about it, but I'm not going to like bitch about it, you know? It's cool. So there's that. Let's go to the NASDAQ for a minute. Why do I think it's going to keep selling off? Well, this might be a stretch for today. I mean, it looks pretty violent, but 14,248 has some lows that we may reach for. Okay, the triple Qs, same story. What we were looking for last week on a small time frame, we had some equal lows, right? We never got that, but on a 1 hour time frame, that ended up forming low resistant lows. So that may be on the table for this week. Okay, if not today, maybe tomorrow. I don't know, but that's at least some justification for what I think is going to happen. Okay, what's good, Alex? But yeah, so, you know, 4268.5 is yesterday's low for S&P. So it's obviously showing a strong willingness to want to trade below that low. But I probably won't do anything here today. You want to know some interesting shit, though? You want to know something interesting? Now, I'm looking at this now because we're here, but because earlier I was working on content and messaging you guys on Instagram. I had dinner or whatever, not dinner, lunch. All right, maybe I am half asleep. But what's really cool is right here at 10:30. So what's interesting about 10:30? Now, I haven't really taught you guys this before. This isn't really something that I look at all that often, but I am starting to like it a lot. What is this right here? And by the way, I think I taught this in the academy like once. I taught this like one time and then I never taught it again. I did an introduction, I think, God, like it probably had to have been at least a year and a half to 2 years ago. What's so interesting about that 10:30? Well, look right here. It hits this up candle, I think, right? Look at that. That's pretty interesting, right? But that's not all. That's not all. You have that lack of wick here too. But look what I marked up for you. The 1 hour. The 1 hour imbalance. Because remember, look at this. Really pay attention here. Okay? You guys want to learn some shit for free. I'm trying to teach it to you. Look. That 1 hour imbalance, right? The Wednesday, or today's fucking Wednesday, the 9 a.m. candle completely blows through that, right? But then look at the next candle. The next candle comes up and it respects that. You guys see that? On a 1 hour, it may not look all that gravy. Like I understand. But now look at it in that same light here on a 5 minute. So what am I trying to show you? Well, number one, I don't typically trade this way. Okay. It's not something that, you know, I would consider myself an expert in per se, but these price points here is the 1 hour imbalance. Price trades through that, but it respects it here to go lower. That's going to be important information. Okay. Now, this is, you can essentially add this to the mitigation model if you know what it is, but on like really, really smaller time frame. Okay. It is hard sometimes for me to find like really clean examples though. Like I didn't even go down to a 15-second chart today, but let me just see something real quick. Yeah, it's not really presented here either. That's okay. We'll find more examples in the future, but essentially it's a imbalance that has been traded through but now has like revisited. You know what I mean? So it's kind of like old support turn resistance or old resistance turn support type of idea. But it's not the same thing though. You know? And it's not just that by itself. It's confluence. You have the old imbalance, but you have this up candle here as well. And then bam, price continues to sink lower. And then you could even argue, this was during lunch, so I definitely wouldn't have done anything here, but that also ends up being a mitigation too. High, low, higher high, that rebalanced price, short-term high, which means traders got in too, and then mitigation there to go lower. Is the up candle also considered a trap candle? I don't know what a trap candle is. It's not something that I teach. It's not something that I look for. I'm not the person to ask for that. So if I knew, I would tell you, but I don't know. I'm not the person. Treating the imbalance that was not respected like as if it was a mitigation. I mean, almost, Kevin. Almost. But again, the whole like point of me showing you this is not just an imbalance traded through and then revisited. It's confluence here, where you have that up candle, right? Because in bearish markets, up candles are respected, right? So you see that, and then you see that continuation, lower and lower and lower, right? I mean, order flow has been bearish. Here's another imbalance. Here, price is continuing lower. I think it's a little late to short now. I mean, if I was holding a short at this point, I would expect the 60s, the 42, 60, probably 65 or something like that. But to me, this is very late to short where we are now. I mean, this imbalance maybe, but we're already like 6 points off of that. So to me, I don't know, it's hard to justify shorts, like as of now. I mean, this is a live session, so I want to at least be able to give you, something to look for or work with. But right now, the predominant focus has been shorts all day. Speaking of shorts, if we look at Dow, the YM doesn't have equal lows here, but the micro does. And you had equal highs up here as well. So, it's rough. It is rough. So it's interesting, right? Dow sideways while the other two indices are lower. So you know what that means? That means, let me look real quick. I mean, someone in the Dow Jones has got to be doing good today. Caterpillar 3.6%, Chevron 2%, Goldman Sachs 2%, Triple M or 3M, yada yada. All right, well, let's see what JP Morgan is doing. 0.7%. All right. They're not doing all that terrible. They're doing okay. We're kind of slowly getting there. We're like slowly going to the 145s. We'll give it a little bit more time. What's good, Andreas? We'll give it a little bit more time. And then, what was the other one? Oh, Wells Fargo's not in the Dow Jones. Silly me. 0.7%. So both Wells Fargo and JP Morgan are both at 0.7% on the day. So at least they're moving, which isn't bad. So there's a little bit of an update for you for those two stocks. So we're still waiting on those. We'll take a brief look at the gold market. Someone asked about gold yesterday, and I said it was hard to tell because we're at a daily consolidation. The 1 hour or the 15-minute, whatever we looked at yesterday, right in the middle of this consolidation, right? So when price is in the middle of a range, daily consolidation, like what are you supposed to do with that? That's going to be a consolidation market, which means, or excuse me, if it is a consolidation market, that means we can expect the qualities of a consolidating market. That was the first lesson I ever did, previously. So that basically in the most simplest form was when you have consolidation, expect manipulation on both sides of the market, right? Expect for price to run highs or run lows and then essentially trade back into the range. So that was a little over two years ago and some change, almost 2.5 years ago. So it has been a while. But for those of you that have seen it, right, what do we have today? Well, yesterday we outlined the conditions. I fucking gave you the conditions, right? And then what happens today? Previous day high swept, price trades back into the range. Actually, quite lower, substantially lower. So that's not a surprise. I didn't trade that. I mean, that was at 8:45. I was awake for that, but I was not watching the gold market. Silver, same thing. It reached a previous high and then traded back into the range. And I believe that was 124.02. All right. And all that was the high of Thursday last week. So that's not surprising. All right. That's what consolidation markets do. They run previous highs, they run previous lows. They're not one directional until like they break out. You know what I mean? So when the market consolidates, that's what you can expect. All right. And I've been ignoring my phone being here with you guys, so my notifications are blowing up. But they'll have to wait. They will have to wait. Anyways, I totally forgot what I was going to tell you a moment ago. The Dow during today, I don't know what we're going to do. Price right now is in the middle of today's range. Can you see that? Current low up to our current high. Look where we're at. Halfway point. Okay. Liquidity on the upside has been swept. We do have open liquidity down here. So if I had to pick a direction, I'd probably go lower. That would be in alignment with S&P taking a previous day's low, and then that would be also in alignment with the NASDAQ taking that low I pointed out to you earlier as well. So that's really the only justification I have for a lower Dow. Okay. If you were here yesterday, we hopped off the session and then we got our fucking move. You guys remember that? Did you guys trade that yesterday? If you did, let me know. I fucking smacked that shit too. We smacked yesterday, we smacked today. We're smacking the fuck out of everybody. You ever seen that video of that guy? It was like a white guy, and he like walked up to a child and like slapped the child, and then slapped another kid, and then slapped another kid, and then the parents were coming by like, what are you doing? And then he would slap them too. That video came out a long time ago. Please tell me you've seen that. That's what we do here, bruh. That's what I'm trying to get you guys to do. Is just slap everything. Bam, bam, bam. All right, we talked about 42.93.5 being equal highs on the S&P. We ended up getting that in the afternoon, just before the close. Just before the close. And the NASDAQ. I won't dive too much into it because this was, I did make this a market review yesterday. But if you're not a member, why the fuck not? But even if you're not a member, look, what I'm going to tell you to do, at least to get some juice, is to study what we did here yesterday and study all the price action within here. Okay? I'm not going to show you the executions, but just know that it was like right here. So I was longing just before the big move. Okay? Just like today, shorting just before the big move. That's what people want. Right? That's what everybody wants to do. How do I get in before the big move? How do I get in without taking drawdown? How do I get in before shit takes off? I'm trying to teach you guys that. I'm trying to teach you guys that. Okay? Now, every trade I take isn't like the ones I'm showing you, but I try. Okay, I try. But order flow, big part of it. That's why I put that video out. When I come out here and point things out to you, like, oh, there's equal highs up here that might be important, and then price runs there. It's like, yeah, it's the process of trading, bro. Picking your targets, studying order flow, and then you're gonna see order flow from a recent low to a high, or a high to a low. It's the same shit over and over and over again. Okay. So as far as alerts go, let's do this. We still have our alerts on the triple Qs. That's still there from a week ago. Literally Wednesday of last week. So 346.54. That's an alert on the triple Qs. The MNQ or NQM, that's fucking confusing. Or I'm just tired. 14,248. So you can put an alert there as well. All right. Look at today, dude. Look at today. This is printing bearish candles the same way that fucking our Fed Reserve prints bread. You know what I mean? Good grief. Good grief. Big wildin' after taking yesterday's high. So there's your triple Qs. There's your NASDAQ. S&P, that's probably going to be met here in just a minute. But that's 4,268.5. That's only 1 point away. So I'm not going to put an alert there because that's like really close. There's almost no point in doing that. No pun intended. And the Dow, the Dow might end up trading higher. The Dow might end up trading higher. Well, all right. There's that. And that's really about it. I lied. The dollar. The dollar took Tuesday's low and has been rallying. So I think if it continues to rally, it doesn't have to, but I think if it does continue rallying, I think that is going to help push NASDAQ lower and the S&P lower as well. So that's a little bit of intermarket for you. Again, not my most favorite thing, not my, best tools per se, but look how clean this is. I mean, guys, if you want something to study, my God, study this. Give me a second here to give you a full markup. I keep forgetting to add my indicator back. Okay. That imbalance that I showed you here earlier, that, turtle soup idea, or that whole your stop loss is my entry idea, where was that? That was above opening price. Okay. So don't forget that. That was above opening price. Then that 1 hour imbalance traded through, revisited, up candle on a 5-minute time frame. Price trades lower, back up, mitigation, down, imbalance, down, up candle, down. So price is extremely, extremely bearish. Okay. So if I were you, what I would do is, oh my God, we've been here for almost 45 minutes already. What I would do if I were you is watch the order flow video and then come back to today on the indices. And you're going to be like, bruh, shit is glorious. Glorious. And here, I'll give you a little bit of juice as well. Or I'll give you a little bit more, rather. Order flow, okay? Whether bullish or bearish, it doesn't matter. Studying the order flow, okay, is also what allows me to not miss moves. and not be upset that I didn't get the highest high. Okay. Even getting in a little bit late, that's fine. Because in reality, is it really late in the grand scheme? No. And if anything, you end up having a little bit more confirmation. Not that I don't really care for that word, to be honest with you, but a lot of people use it. When you see bearish order flow, to me, it's like, it's what makes the imbalances more high probable. It's what makes the mitigations more high probable, because it's not just a logic imbalance above opening price. Because I don't know if you looked at it, but what else do you notice here? I showed you the 1 minute, right? But I didn't show you the 5 minute. I didn't show you what else was there. What else is here? Order flow, guys. In a bear market, right? Up candles should be respected, yes? And you see that. Okay? So this line here, you got to understand, is this 855 up candle. But look at the 1 minute. Look at the manipulation right there. It's within that 5 minute up candle. Top down analysis, man. Top down analysis. Look at that. Okay. And some of you might think it's a lot of work. I mean, it can be. And now we're just creating equal lows. At least on the micros right there. I guess we could put an alert down there then. It's fine with me. But in like the overall sense, is this not really, really beautiful to you? Because I think it is, man. A long time ago, I told you about this as well, but you know, it's YouTube. We got to redo it here. When I first started spending a ridiculous amount of time on charts, this is why. Like, this is what people did not understand. People understand gamers, right? Oh, John, he plays Counter-Strike, he plays Call of Duty, he plays, you know, fucking Overwatch or whatever. And people understand that because you're playing a video game. But I did something similar with the charts. I would spend so much time on charts, looking at this, looking at the times as well. I haven't talked a lot about timing today, other than giving you like certain candles, but you know, there's your open, 9:30, 10, 11 to 12 is our lunch, right? So here's our afternoon session currently and what we're doing. But when you have a bunch of specific markups, okay, then things become a little bit more clear, right? You look at a naked chart and there may not be too much going on, but when you actually mark them up and it actually tells the story, that's what makes me, you know, keep spending time on charts. This was like 4 or 5 years ago, probably longer than that, but it's like, okay, well, that's great, but what else is there? And then it's like, well, fuck, we have other assets to look at. You know, that's just S&P. We haven't even looked at Dow, right? What's, you know, mark that up. What's it doing? Because it's a different story. It didn't trade lower and lower and lower like the others did. It's a different story. NASDAQ, hard to say, other than above this high, if we look at, which I didn't. There's a small little bull flag here too. So that's always nice. There was one thing I looked at earlier, and now I can't remember what it was or where it was at. It might have been silver. Yeah, it was silver. Okay. So you already know silver sold off, right? And I showed you that we ran that one previous high, right? But if you look at it on a 1 minute time frame, I'm trying to keep everything on here. When it sold off here, it left an imbalance there. Okay. Now, why is that significant? Because some of you might be watching, you're going, oh, John, what the that's hindsight, bro. That's hindsight. You didn't see that ahead of time. Well, at 9 o'clock, I wasn't looking at silver. But you know what? You know what this right here is? Okay. Give me a second here. I got to pull it up. This one isn't even a membership video. It should be. But this right here was this video. The low risk, high reward setups, or excuse me, the low risk, high reward intraday setups. What's this right here? 15-minute time frame, right? And I told you guys real briefly, top-down analysis, right? What's right here? Break of structure, imbalance, done, right? Okay, well, when the fuck was that? That was a month ago. Okay, this is today. There's your break of structure. It doesn't close. I think it does at 9:09. It closes lower. Leaves that imbalance after breaking, breaking structure after a run on liquidity, right? There's your low risk, high reward intraday setup. So that's pretty fucking cool to me. You put out a video a month ago and that shit is happening today. All right. Look, I don't know how else to like teach. You know what I mean? It's like, this is what happens. And then days later, shit happens, you know, or even a month, a year. I mean, however much time it happens, you know, so you just got to pay attention. That's all. That's all you got to do is pay attention. Is that pretty cool or what? Let me know in the chat. Is that not really cool or what? Because shit. Because I think so. 2 minute, same thing. Breaks or trades above an old high. Break structure. Leaves behind an imbalance. Done. What drawdown? This is a 2 minute chart. What drawdown is on that? What drawdown? What is that? Low risk, high reward. I know I talk shit about some people sometimes, like, oh, you know, 1 to 10s and stuff like that. But dude, look at it. Come on, man. Small risk, large reward. I don't know what else to tell you guys, man. I don't know what else to tell you. But I love this shit. I know you guys love this shit too. I know you do. We'll spend a little bit of time on the S&P. But as far as pulling the trigger, I don't think I'm going to do anything else today. Okay? Well, let me just run through my announcements real quick. I talked about the institutional overflow video that came out today. Goal setting, that video came out today. Market review is going to come out tomorrow. The mitigation model is going to come out on the 14th. On the 14th, members only. I think that was it. I haven't decided yet what we're going to do as far as Discord or Telegram. I don't know. We may end up doing both, or we may end up doing just one. Haven't decided yet. But I think I'll make a decision by the time we get to 100 members. Because we're almost at 70. I think we're in the mid 60s. By the time we get to 100, I'll have a definitive answer for you. Because people are still, I mean, dude, it's been like almost 4 weeks. It's been 3.5 weeks since I've officially made that announcement of me leaving, right? The academy previously. So like people are still finding out and like still asking. I'm like, damn, bro. It's been like 3.5 weeks and you just now found out. So we know who's not watching every fucking day. We know who's not watching every week. You know what I mean? So, but it's cool. I'm not mad. Maybe a little bit, but it's just like, look, man, hop on YouTube. I was getting messages like that yesterday. And that's why I made that that story when I was outside. Because people still message me, oh, John, you know, where can I learn how to trade? What the fuck kind of question is that? Where can you learn how to trade? What do you mean? You know, hop on YouTube, bro. Or people complain to me, well, my team doesn't trade. We'll put them on my fucking YouTube channel, dude. How about that? It's like, I don't understand some people sometimes. It's like, dude, do I ask a tattoo artist, where can I get a tattoo? Oh, come on, man. You think I'm gonna go to a hair salon to get a tattoo? No. So people complain to me that they join a business where trading is promoted, but it's like that's not really what they do. Okay, well, if you want to learn trading or if you just want to trade, then go somewhere else. It's as simple as that. Honestly, it's as simple as that. All of you in here have permission to share my YouTube channel. All the stuff on my page is free. There's membership videos now, but we're at almost 150 videos altogether. Now, mind you, I think that includes the reels as well. So that, or the YouTube shorts. I keep forgetting to call it shorts. But look, I can't tell how many members only videos there are, but you look at the videos and there's tons, dude. There's rows and rows and rows. Starting from 4 months ago. It was really 6 months ago, but the first lesson I've done on this YouTube channel was 4 months ago. That was the divergence. And then fractalization, some other stuff, discussions, and then shorting above the open, break of structure, growing an account, trade management, fib logic, a trade walkthrough, relative strength again, secret to fractals, indices before and after, the triple screen, unlock your potential. It's not technical analysis, but you know, psychology discussion, indices review from last year, stock exchange open, all that's free. S&P study free. S&P study free. Another S&P study free. Smart money Stoics free. Tired of getting stopped out free. Smart money Stoics 2 free. Predicting tax on liquidity free. All of it's free. Like, come on, I could be here for a while. You guys can share that with whoever you want. I don't care. I don't care. YouTube is my home now. You realize that? YouTube, this is my domain now. And this is where I'm planting my fucking flag. So this is it. I think we just created equal highs too. Oh no, we swept that on Dow. Ooh, I wouldn't touch the Dow today. I would leave the Dow alone today. Ooh. Look at that 15-minute here on the ETF. Look how many times it traded into that gap this morning. Look at that. That's horrible. That is horrible. Anyways, you guys have any questions? Because I'm pretty much done for today. We went over a lot of stuff. We went over our announcements already. Break even on the Dow short. You shorted Dow? I mean, if I had to, I would have. After that first 15-minute here. But do you see that? Imbalance, and then it traded through, and then now it traded back into it and off of it. You see that? It does that on a 5-minute too. I think. It's hard to see. Right there. Oh no, it doesn't hit that. Or does it? I don't know. I think the magnet tool doesn't give it exact. But you do have this. So that would be the 15-minute that traded through. On the way to doing that, it was the 1235 candle that had a 5-minute. So there's a little bit of confluence there. I wouldn't long that, but I'm just looking at what price is doing and just kind of seeing like what's going on, what's taking place. And the 1 minute is the worst time frame ever for the Dow. So I don't know. But all right, if you guys don't have any questions, then that's going to be a wrap for today. So make sure to watch the videos. Make sure to take notes on those videos because we're going to be referencing them a lot, dude. And I do that a lot. You guys have to understand that. I reference old shit all the time. I'm like, yeah, we talked about this last week. We talked about this the other day. You remember this specific lesson? You remember the whatever? I mean, we have stocks running for months. We have, option plays running for months. I mean, we have shit that you got to be organized. I mean, you're going to have at least like 2 notebooks. At least. This is what I would do. Okay? If it were me and if I was watching me now, what I would do is I would get a small notebook. I don't want to show you what's on here, but as my lesson plans and shit. But I would let me blow this up. Give me a second. All right. I would get a small notebook. So not a full size, but I would get a small one. This was on sale. That's why I got it. 120 page, 9.5 by 6. It was like 50% off or some shit. So I'm like, all right, cool. I'll just pick one up. So it's not a full notebook. It's a small one because this is for taking notes on where it's more like line items. So for example, book of the month. I think someone just asked about that a second ago, right? That's, this is for like writing announcements. Book of the month is this, or mitigation model coming out on Wednesday, for like reminders like that, not taking notes on the shit that I'm talking about, like, this, that, and the third. That needs to be in a separate notebook because you got to draw stuff out, annotate, whatever. You need more room for that. But I would have a small notebook for announcements and another like 2 notebooks for actually taking notes on. Let's see what I got here. This is like a full size notebook because that's where you're going to be able to draw your mitigation and whatever else and all that. So small notebook for announcements, big notebook for taking notes. You need a trade binder for printing off charts. Okay, binder for printing off charts. And then, of course, a trading journal. Okay, you need all this shit. At least I think so. You don't have to. I mean, it's your trading, it's your life, it's your career. You're gonna do what you want to do, but that's what I think. Okay, that's what I think. But do what you want. Do what you want. Telegram or Discord. I'm game for whatever you got. Yeah, I appreciate that, Naruto. Yeah, Jose. So the problem, Jose, with Book of the Month is that I don't think anybody was actually reading them. I think people were adding them to their carts and not buying them, or they would buy them and then not read them. So to me, why do I want to like keep putting that effort in when I know that it's a very low turnout? It'll probably just be an announcement at this point. I'll probably just be like, hey, Book of the Month is X. And that'll be like the one post for that month on Book of the Month, and that's it. Because I don't want to sit here and, discuss it, talk about it, or even do like giveaways and stuff, because I know that people aren't even going to take the time to read it. So I'd rather just let you know what it is, but not do anything further than that. So we'll bring it back. But that's what it's going to be, is just a post, not anything more. Okay? So, greetings from London. Greetings. But we are off here. All right, we're off here. So be blessed. Tomorrow, I won't see you on a live session, but you will see me for the market review. Okay. I'll see you here on the live session on Friday. So stay blessed. I will see you guys then.